So hopefully everybody can, just going to share my screen here. So hopefully everybody can see it. Just making sure that I know that you're being recorded, that we're being recorded. So hopefully I won't say anything that I'll later regret.
We'll edit it out if need be.
I could be a politician and try to deny it. So at any rate, great to see everybody today. I want to share with you a little bit about Deep Customer Connections and an exciting new approach we're taking to help out mutual insurance companies. So I want to start off by talking about what we do at DCC, which is we specialize in measuring the relationship between P&C carriers and independent agents. And more specifically, we help our clients measure the agent's perceptions of how easy it is to do business with you. So we create both quantitative measures through the development of an ease of doing business score, as well as we gather qualitative data through comments. The goal is to provide our clients with an agent customer experience map that points you in the to where you are performing in an excellent manner and where you have the greatest opportunity for improvement. When I first became involved with DCC, it was as a client. I was working for a super regional company in Iowa. I was actually in Michigan running their Michigan operation. They asked me to come back and lead all of their branch operations countrywide. At the time, we'd been sitting right around about $1 billion in premium for a number of years. And what happens when you do that, as you know, is sometimes your expenses start creeping up a little bit. People want raises every year and that sort of thing, and you're taking that out of the same premium pot. So, and also we got into a good point where we felt like we were really healthy, and the leadership team wanted to grow the company. So we decided, I was tasked with getting our branch operations to grow, but not just grow, of course. We wanted to improve our underwriting profitability, which, as you know, growing is much easier than growing with profit. So that was the challenge. And so we started asking ourselves, how do we do this? How do we attract the agent's best business? Is it through always having the lowest price, or always having the broadest coverage, or swamping them with extra commission? We analyzed those approaches and pretty quickly came to the decision that even though you could grow from those approaches, you could not grow long-term profitably. At least we hadn't seen any other companies be successful at that with those approaches. So instead, we decided to improve ease of business. But we had to decide, what does that look like, improving ease of business, so that we could explain that to our teams and measure it so that we could see if we're making progress. That's where Deep Customer Connections came in. We hired Deep Customer Connections to help us measure that. After focusing on ease of business for a 7-year period, we've grown the branch operations from $1 billion to more like $1.6 billion. So really good, solid, consistent growth. So I kind of became a believer in this approach, and decided to join DCC as the CEO. And so here I am today. So traditionally at Deep Customer Connections, our clients have been these regional, super regional, or national P&C carriers. Our survey and analysis process that we use with them provides a really in-depth, very detailed knowledge of how they can perform compared to their competitors. So they weigh this information into their strategic planning and their customer experience analysis. Many of them have their own customer experience person, or some of them have even teams of people that focus on customer experience. What we saw last year was an acceleration. For a long time, there's been a lot of increase in digital transformation in our industry, but last year we saw that accelerate because people were basically forced to, because of COVID and working from home and that sort of thing. Also, at the same time, we're seeing where many agents are getting larger and they're getting more sophisticated. So there's a lot of change going on in our industry, and our client carriers, these larger regional, super regional, and national companies, they use our data to verify that they're keeping up with the Joneses, that they're keeping up with their competitors, and to identify that where they're putting their resources is in the areas that are really going to improve the agent's experience. Well, earlier this year, Paul Steuven, who's with us today on the call, of Fairmont Farmers Mutual, contacted me. We'd met each other a couple times at some NAMIC meetings, and we were just kind of catching up. And together we started wondering if, like these regionals and nationals, could county and farm mutuals gain value from a better understanding of the customer experience of their agents. We had to acknowledge the fact that, unlike these regional and national companies, many mutuals really can't justify their own customer experience staff to help them. They're just not at that scale. So we wondered if we could help them, help you, by developing something. And so Paul wanted us to develop something for him at Fairmont Farmers Mutual that he could use to help him focus the Fairmont team and his agency council on how they can continue to improve their ease of business with their agents. So he and I worked together and we developed this new approach, which we're really excited about. We tested it out on Paul. Thanks, Paul, for letting us test it out on you. And he found it to be very valuable. So today, I want to share with you this new approach, which we call our Quick Dive survey. And in the course of this discussion, I also want to share some insights about from agents about how P&C carriers can improve the ease of business. So I hope this is both educational about what we can do for you at Deep Customer Connections, but also I hope that you take away one or two good ideas from what we've learned from feedback from thousands of agents that maybe you can utilize in your organization. So first, you may wonder if ease of business is really important to attracting business through your agents. According to tens of thousands of agents working with hundreds of different carriers across the US, 99% of agents tell us that ease of business is a critical factor in choosing which carrier they place business with. We feel like that's pretty good validation that agents value ease of business. So the goal of our Quick Dive is to provide mutuals with actionable data you can use to deepen your connection to your agent distribution network. Our approach is designed to be economical, reliable, in other words, consistent. So hopefully, as we get more people participating, we can maybe even benchmark against each other. And also, it's meant to be independent. By that, I mean that we provide you with the URL that you send to your client or to your agent list. The agents respond to that URL, but it comes back to us so that it's an anonymous response. On the one hand, you can't tell who it is that's giving you either very positive or very critical feedback, but the feedback you get will be more honest and open than if you just went to them face to face. It's also, unlike a lot of customer experience approaches, this is not general. We only work with P&C insurance carriers. That's our focus. So this is not just something general that you then have to try to make work for an insurance company. The way we ask the questions is designed to be very specific to, and tailored to P&C carriers. So how do you use the data that we gather from your agents? Well, you can use it in strategic planning and board of director discussions. Many boards of directors want to know and have a quantitative measurement of how you're doing with your customers. And then it also helps as you're having strategic discussions and identifying where you want to place your limited resources, where they're going to be most beneficial for your organization and for your profitable growth with your agents. It can also be used once you decide changes you want to make. As you get feedback from your agents, you'll see where your opportunities are and where your strengths are. And you may decide you need to make some changes. And when you decide that, it's really nice to have data to share with the team that helps support this. This isn't just some idea you cooked up. This is your actual agents giving you feedback. And also it helps, a lot of people are wanting to grow. And as you grow, you have to add team members, or you may be having to replace team members due to retirements. So as that happens, you want to keep that great culture that you've developed as a company. And this data can be used to educate these new people when they come in so they understand what's really important to your organization and why. And also you can use it to help focus your agency council discussions. So those are some ways that clients can use the data that we organize and provide to you. So at DCC, we have historical data from over 72,000 agents. These are agents that we've surveyed over the years in our DCC benchmark analysis surveys. Those are the surveys we do for those regionals and nationals. And in the course of developing our process, we've identified 11 key different factors that impact the experience that agents have in doing business with carriers. But in preparing this for you, we wanted to kind of focus in on those factors, those of the 11 factors that agents have identified that are consistently more important to the majority of them. Therefore, we chose 6 factors to measure in this quick dive approach. And you can see these factors here: claims handling, underwriting flexibility, underwriting responsiveness, policy services, understands and acts on the agent's needs, and technology. And I'm going to go into a little bit more in depth into each of these factors in a minute. But before we ask the agents to rate your performance on each of those factors, we also ask them to identify the 2 factors that are most important to them. What this does is it allows us to rank the factors by importance to your agents. And this in turn helps you as you determine where you want to focus your resources. Then we ask the agents to rate your performance on each factor on a scale of 1 to 4, with 4 being the highest. Here's an example of a fictitious company, and these are fictitious numbers for the fictitious company, our mutual insurance company. We just wanted to show you what a company might see from having done one of these surveys. So you can see that overall, on a scale of 1 to 4, our mutual insurance company has an overall ease of doing business score of 3.5. But some factors they're much stronger at than others. So for instance, their strongest factor is underwriting responsiveness, followed closely by their claims handling and their policy services. And then maybe their greatest opportunities from a performance standpoint would be underwriting flexibility and technology. So the ease of doing business score gives us quantitative measures to determine more specific areas of excellence and areas of opportunity. To do that, we also ask open-ended questions for each factor. As a result, agents provided us with more detailed insights. So if the agent indicated they strongly agreed with the performance on a factor, we asked, what's this carrier doing particularly well? And then when we provide the information back to you, you can see the comments that came from those generally positive ratings. And this gives you a really good feel of your areas of excellence, where you're already excelling, those areas you might want to expand, but you certainly don't want to lose. If an agent somewhat agrees or disagrees that you perform well in a factor, we ask them specifically an open-ended question about what can you do better? And that gives you some really good more granular feedback about what you can do to improve. So let's discuss what we've learned from past comments and agents on each of these factors. That'll help kind of flesh out for you why we've chosen these factors and what they mean. Also, I hope it gives you some insights into ideas of things you can focus your companies on to improve your agent's perception of how easy you are to do business with. So if we look at this first one, the first factor would be claims handling. The reason I put this first is when you look at our universe of surveys that we've done, in almost every survey, claims handling is the most important factor to agents in their perception of how easy a carrier is to do business with. So sometimes we lose how important claims is, but the agents certainly don't. They understand this is where the rubber meets the road in a carrier relationship. It's the most important thing to them. When it comes to claims, they're considering how prompt are you handling the claims and how fair. So what you'll get around comments about this will be discussions about has your claims team been prompt for them, and in general, are they finding that you're handling claims fairly, or is this an area of improvement for you? I threw in on each of these factors, you'll see a comment. I'm not going to necessarily read the comments to you, but these are actual comments from agents from a variety of different surveys that we performed over the last year. So this is a factor that's of interest to me because it's complicated. This is underwriting flexibility. And what we find is that in our surveys that we do, the underwriting factors, the underwriting flexibility and underwriting responsiveness are always extremely important to the agents. Not quite as important as claims, but right up there with claims. So, and also the thing about these underwriting factors is they go directly to the transaction that helps you attract business from the agents. So extremely important that you perform well in these factors. So what is underwriting flexibility to an agent? So while answering the underwriting flexibility question, agents tend to be thinking about considerations, but the overarching consideration is, are they typically successful in placing and keeping business with you? So there's several factors that really go into this for them. The first being, how clear and how broad is your underwriting appetite? Secondly, how stable is your underwriting appetite? Once again, they want to be successful at placing with you. They want to know what you want, and then they want to be pretty successful when they send it. And then also they want to keep it there if possible. The next thing that they're considering is, what's the agent's willingness and ability to problem solve with them? And when I say that, that doesn't mean that the underwriters are always saying yes. It means that the underwriters are actively communicating with the agents, listening to them, and know their business so that they can know the parameters at which they can make good decisions and help the agents out. And then another factor is, of course, coverage, price, and terms. But really what's important there is that they're generally competitive. As you know, the performance in underwriting flexibility is a double-edged sword. So if you improve your performance with the focus on just lowering your rates, or you put pressure on your underwriters and they begin to give up on their discipline, then we know that over the long term, that's going to hurt your loss ratio, which is not where you want to be. But there are things you can do to really improve the perception of flexibility without cutting into your chance to make an underwriting profit. You can be really clear about your underwriting appetite. What we find from comments from agents is, what bothers them is if a company kind of expresses that they have a general a very general appetite and says, well, just send it in, and we'll see what we can do. That tends to lead to having to say no a lot. And the more that the agent's going to the trouble of putting it together and getting it to you, and then that you're not successful, the lower that perception goes. So if you really know what you want and you can express it well, you're going to be way better off than other companies when it comes to performing well at underwriting flexibility. The other thing is, like a mentor of mine once told me, he said, Jason, be sure you measure twice and cut once, right? Don't be just running around coming up with new things to do. Kind of make sure that you're thinking through them carefully, because once you tell agents that you want to do this thing, they're gonna hope that you're going to continue to do it into the future, because they don't want to have to remarket it. And the other thing is, here again, having underwriters that really feel comfortable communicating, listening, and problem solving with your agents. So if you do those three things, you have clarity of appetite, pretty stable appetite, and your underwriters really problem solve with the agents, you can have a good underwriting flexibility performance score without having to cut your rates and your coverages. Okay, so that's quite a bit of detail on underwriting responsiveness, but it's a very important factor when it comes to agents' perceptions of your ease of business. The next one is underwriting responsiveness. The beauty of underwriting responsiveness is you don't necessarily have to be flexible, you just have to be fast. And if given the choice, I would rather be fast than flexible. So that's been my experience as an underwriter and a leader of underwriters. Now here you have a comment that is an agent responding to a question of, what's the easiest company that you work with? What are they providing you for an experience right now? And you can see this is a bit daunting for many of us, because what they're saying is, this company issues policies and change requests promptly. The policy and endorsements are usually in my email within minutes, unlike months when I first started in the industry, minutes. And our underwriter usually answers the phone or returns voicemail or emails promptly. Believe it or not, many times we're getting comments from agents from multiple surveys, from multiple companies about their frustration that nobody will call them back. It seems like a very simple thing, but evidently in practice, it's very difficult. If you're able to do it, you're going to stand out as a company, and agents are going to perceive you to be very easy to do business with. So another thing our data tells us about underwriting responsiveness is, when we aggregated all the data from all of our surveys in 2020, it's the greatest opportunity for the industry as a whole. Only 38% of the carriers improved their performance last year. Only 38%. So well more than half either stayed the same or got worse when it came to responsiveness. And here again, responsiveness being an extremely important factor to agents. So, and this was at the same time that the agent's expectations for timeliness is increasing, and that some carriers are getting better and better. And another thing we've learned this year, we've been doing some collaboration with an insurtech company called Deus. And what they're seeing in the work they're doing is, they see that for some of their clients, that the data that they've been able to gather, their hit ratios, the client's hit ratios goes down exponentially with each day that passes from the time the application and quote is submitted. So what that means is, responsiveness not only helps you from the standpoint of your customer experience, but by gosh, it's going to impact your efficiency and effectiveness, your expense ratio, because your people are churning and burning. If they're not getting right back to these agents, the agents aren't closing the deal, and you're not closing the deal, and everybody's just wasting a lot of time and money. So underwriting responsiveness, very important factor. Another factor that we measure is policy services. This is your blocking and tackling. This is, are you getting your policies issued on time, and are they accurate? Is your billing broad enough that it fits most clients and most of your agents and policyholders' needs? Can they easily access the billing information and explain it? Are your endorsements timely? And are your renewals timely and accurate? So agency needs, this is an interesting factor, and it's not as important to the agents as the claims and underwriting, but it's very important to the agents. And to me, I think it's an area where mutual companies can really stand out. The factor, our data from all of our surveys shows that this is a big opportunity for the industry, especially for the larger companies. Many agents don't feel like they have a common purpose with these larger companies, that they don't feel like they understand and act on the agent's needs. They feel like it's all about them and not about the partnership with their agents. But since you're often in the same community as your agents, or certainly in a community that's very similar to where your agents are operating, it's a factor that you can just naturally differentiate yourself with. But to do that, you want to be sure that you're listening to them and that that they feel like you understand and act upon their expertise and experience, that you're involving them. They want to feel like their compensation is fair and that the incentives are fair. Not necessarily that you pay the highest commission, but that you're in the ball game. They want to provide. They want you to provide a clear and timely and easily accessible communication and information with your team. How accessible are the leaders of your company, and how accessible are the people that they need to speak with when they have a problem? And then if you can offer them some training, some general and company specific training to help them be better agents, that heightens that feeling of your performance around understanding and acting on the agent's needs. So technology is the sixth factor, and it's ironic to me that many of us spend a lot of time and treasure on technology, and yet what the agents tell us in survey after survey is that they give it less of an importance level than claims and underwriting. But don't get me wrong, technology is very important, but it's important to the agents because of how it impacts the claims and underwriting, how it's a tool for them that can help them as they're submitting and closing business and servicing their clients and smoothing out the claims process. So from an agent's perspective, when it comes to technology, that's what they care about. And you can see from this comment, this is once again an agent describing a technology experience from a company that they view as easiest. So they say they have great tools for quoting and a simplified system to review coverages, claims, billing, and submit endorsements, and even to review prior renewal terms. So basically, what this agent's saying is they want to be able to self-service through technology. They want to be able to quote, issue, do endorsements, report claims, make premium payments, all of that as much as possible through technology. And what we find is technology is more important to personal lines oriented agents and those focusing on small commercial than it is to larger agents, to agents focusing on larger commercial. The agents focusing on large commercial give a higher importance level to underwriting flexibility than they do to technology. But that's not the case for personal lines and small business. So most of you are focused on personal lines and small business in your organizations. So technology is important. They want to be able to self-service. That said, the next thing they almost always say in their comments around technology is, I want to be able to self-service, but then I want to be able to talk to a human being when I need to talk to them, and I want them to give me a competent answer quickly. So that's where this underwriting responsiveness and technology tie in hand to hand. And many companies, especially larger companies, are saying technology can replace the human interaction. But what we're finding is agents don't agree with that. The agents want to have their cake and eat it too. They want to have this great technology that allows them to self-service. And then, by gosh, they want to be able to talk to a human being when they need to. So this is our mutual insurance company. And I'm kind of putting this up now, hoping that I've talked for 30 minutes. My voice is starting to wear out. I hope that we have some great questions from the audience. But let me, just to get it started, throw out a couple questions. Let's pretend that we're all leaders of our mutual insurance company. What factor would we be most proud of from this information that we have on the screen, especially after listening to what's most important to agents? Okay, I would say, if it was me, I would say I would be super proud of this underwriting responsiveness performance score. So 3.7 out of 4 on a factor that's extremely important to agents, and a factor that doesn't even have anything to do with how flexible my underwriters are. And I'm doing really well in underwriting responsiveness. I'm going to want to reinforce that with my team. This is super important, and this is why this is a differentiator for us as a company. And also knowing that claims is super important, I'd be pretty proud of providing this kind of a level of claims experience for my agents. Where I might want to plow more resource would be into something that combines my strength of underwriting responsiveness with the opportunity I have for technology. So that would be my thought if I was the leader. And what I would do is I would dig into the comments on those factors, and I would challenge my team to dig into the comments and have a really good, robust discussion around how we can get better and how we can keep what we've got. So, any questions around the customer experience? Any thoughts about how this might help mutual companies?
It's okay, Jason, I'll just jump in here for a second.
Sure.
You know, when I was visiting with Jason on this, you know, we were looking at it sort of a threefold, and Jason pretty much touched on it, I believe, but you know, we have an upcoming agents advisory meeting, which we're looking to use the data for, strategic planning. And then also we'll be having some long-term employees turnover in the next few years. And we're looking to get a baseline on where we're at. And also in the past couple of years, we've done a thing or two different from a technology standpoint, and just wanted to get a read on that too. And it gives us, I think it gave us a good baseline. There were some, items where it was confirmation, where, what we were hearing verbally from agents, it confirmed that. And then there were areas where it was some aha moments where, we really weren't hearing this from agents. We sort of suspected there might be, some validity in what, to go with the comments that came in the survey, but we weren't hearing those things directly from the agents. They sugar-coated it, or one thing too, in the agencies, the list, the email went out to our entire email list for agency force. So, there are times where a CSR might not tell you, because they may not think they have the authority to in an in-person setting, but in an anonymous survey, it sort of takes the, or puts the gloves on when it comes to honesty once in a while. And we found a lot of value in it, and have some things where we can, give kudos to the staff and some areas where we definitely have opportunities. So we found a lot of value in it. What weren't sure going into it, what kind of response we'd get. We ended up with just over a 40% response rate from our agents, which for a survey, from my understanding, and Jason confirmed this, but that's extremely high. So we're using it multiple different ways, and feel it was worth the time and effort and expense to do it.
Yeah, generally, when we were doing surveys for the regionals and nationals, we get survey response rates anywhere from 7% at the low end to 20% at the top end off of their lists. So I was blown away by the 40% response rate, and even though Paul's list in relation to some of those other companies where they might have thousands of email addresses, the 40% response rate gave us plenty of data to chew into. So it was a win-win.
Paul, if you don't mind me asking, did you already have an agent advisory council, or did this help you to create one?
We did have one. We've had one in place for a number of years, but each year it's okay, what's the list of topics? What do we want to, focus on? And we're actually, the agents on the advisory council are going to see the complete survey. And we hope to mine a little more out of them through that process. And, you do a little deeper dive and, okay, we've had some negativity here. How can we improve on that and hopefully get some very honest feedback through those discussions?
Does anybody else have any other good questions for Jason at this time? Don't have to be good questions. Any questions? I'm sure he'd be happy to answer anything he can.
Yeah, I would. Maybe people are thinking that they've got specific questions that they'd like to ask about their own organizations offline. If so, my email address is Jason, Jason, .Bogart, Bogart, at deepcc.com. And I think Brian sent something out. Hopefully my email address was included in that as well. So
Yes, it was. There was one comment that was thrown in the chat session here. It says, is it still critical to talk to agents by visiting their offices, or are newsletters, video clips, etc., effective ways to communicate? I guess, what would be your response to that, Jason?
So important to visit their offices or remote forms of communication like emails and brochures and newsletters and that sort of thing. I would say yes. I mean, if you're trying to get something, people to appreciate you and make sure that you're communicating with them, my experience is it's hard to over communicate. So hitting them from multiple different directions is good. I believe that visiting agents face to face is something, if you can afford it, that is very worthwhile. I would say that what I've seen change since I started in the business till today. When I started, there was a lot more of this just kind of general going into an agent's office and chatting with them, and that's still very important because it's part of that making them feel like you understand them. I mean, you have to. People won't feel like they won't care what you know until they know you care. So it's very important for them to know that you care about them as people. But increasingly, agents want to work with the people that are visiting them that can help them on specific transactional issues that they have, that they want to, if it's an underwriter visiting them, they want to be able to go through some accounts and talk about, how can they write these? How can we write these together? And the same if it's just somebody that's their sole job is to be a marketing person. So I don't know what other people, hopefully other people on this call have some opinions, but my opinion is the more you can do face-to-face, the better. I think but not everybody now wants to communicate that way. Some people want to get things electronically, so you want to go that route as well. Anybody else have thoughts on that? Okay.
I just wanted to say that Jason and I had talked about the product here, and I really like the objectivity. I mean, for years we've lived in that subjectivity where we hope, we think, we kind of feel like this actually allows you to put your hands and actually touch what the data is, and I thought that was pretty cool.
Yeah, and that is a difference between when your marketing team is out, or if you're for some of you, you may be the marketing team, right? So when you're out talking to your agents, I mean, it's hard for people, especially Midwesterners, to be brutally honest. And well, for some of them, I mean, I have to admit, I have had some agents that had no problem with being brutally honest, but as a general rule, we want to have a long-term relationship. We don't want to hurt somebody's feelings, but it's easier to give people critical feedback if it's anonymous. And so we have seen, like Paul said, you get a little bit more color around some things that maybe agents allude to, but you don't pick up on because they're not being direct about what their issues are. So it's a nice supplement.
Another benefit we saw from it was Jason's experience and knowledge, and from the other surveys to, okay, here's sort of how you compare, or here's, some of the comments you received as compared to comments some of the others received, not putting company names with it by any means, but, just having something to compare to, or baseline, if you want to call it that. I visited with Jason. It'd be nice from a Farm Mutual standpoint if, a bunch more companies did this and we have our own database baseline type thing. But, we compete with the regionals, the super regionals, whatever, on a daily basis, and how we stack up, even with the abbreviated survey here is important, because it's part of our challenge.
Yeah, what I used to tell my team was, it would be great if we were too big to fail, but we're not. So we've got to roll up our sleeves and beat people every single day around ease of business. Otherwise, we don't bring value. So, and that worked for us. And I think to a great extent, it's a real advantage mutual companies can have.
All right. Well, any other last questions for Jason? Not seeing any. I want to thank Jason for having taken the time today and spread his knowledge with us. Certainly, if you have any questions, you can reach him directly or call out to me. I'll be more glad to get your information over to Jason, and he would be glad to be in touch with you.
Right. And I'm going to, my plan is to be at the MIAI convention. So hopefully I'll be able to meet some of you there in person.
Sounds great.
Okay. Thank you.
All right. Well, thank you very much, everybody. Have a good afternoon and look to see you soon.
Thank you.
Take care.
Ready?